Us is Peter Anderson, Chief Investment Officer founder at Anderson Capital Management. Always nice to see you, Peter. Happy Friday. Not so much for the markets, just how would you characterize with the performance we've seen this week off the back of epic fury?
Many investors are confused. They're trying to make sense of the day-to-day, actually hour-to-hour news cycle. And as a result, I think you get this incredible volatility. You know, the markets seem to be transitioning from, remember the AI enthusiasm? I mean, we talked about that for a long time. That seems to be out the window right now. And instead, it's the geopolitics trade. But, you know, that creates volatility, but also opportunity, especially in sectors like European defense, which we can talk about in a moment.
Yeah, okay, a lot to unpack there. Let's just start with that opening line about how the markets are somewhat confused. How does this compare, Peter? I mean, you've been doing this for a very long time, to previous shocks we've seen, I mean, particularly in the Middle East, when it has created an energy shock.
Well, there is a playbook out there, and, you know, they say history doesn't repeat itself, but this is very close. I mean, the only difference, I think, is now that we have instantaneous information, and so that just speeds up everything. But the psychology, the human behavioral aspect of all this is a playbook that I think we're all familiar with. So the veterans out there that have seen this before, I don't mean to trivialize the disasters that we've been observing, but you do have to take this somewhat in stride and recall what happens at the end of when it resolves at that end, or also once we get used to this. Now, remember, the Ukrainian conflict has been going on for years, and at first there was this kind of reaction, and now, sadly, that news item isn't really in the top 5 lists daily now.
Yeah, not to mention, obviously, when we look back to, for instance, more recently, 2022, when we had that energy shock post, obviously, Russia-Ukraine, we had a fairly healthy old jobs market, which doesn't seem to be the case today, which obviously we got via the payrolls and unemployment. Although, you know, just one print, let's see if that's a trend. You mentioned AI optimism. Look, Peter, that has very quickly shifted to AI pessimism. I mean, look at the sell-off. I mean, some of these oversold levels we've seen in softwares. What has surprised you about that? I mean, how would you characterize that trade right now and just the bifurcation we're seeing?
Yes, and I would replace, for my reaction, not necessarily surprised, but I was very pleased that the narrative shifted, because for some time now, at least a year, I have been a bear on the CapEx spending for AI. And so I'm somewhat relieved that everybody else is not jumping on that bandwagon totally the way I am, but at least they're opening the door to let us know that they are starting to ask, is this CapEx ever going to produce profits? And I think that is a very healthy thing. So the enthusiasm before that was really off the charts, and I actually thought it was irrational. When you really study the science behind artificial intelligence, I think you come up with a more tempered outlook than most bulls have had over the past 2 years.
Yeah, it's interesting because the counter argument to that is, you know, the $700 billion or dollars that just a few hyperscalers have announced this earnings season is going to be very stimulative for the economy. And that's where you've seen investors sort of piling into sort of the picks and shovels. So I suppose it's a very healthy debate playing out in this market, Peter. But I do understand where you're coming from. Look, if volatility can be your friend, where are you looking for opportunities? I see you're looking at European defense. Obviously, even before what we've seen this year with Venezuela and Iran, that had been the case, given obviously a war on their doorstep. Just talk us through that.
Absolutely. So what is surprising me, though, is the incredible volatility of the Euro defense, the ADRs that we're holding in the portfolio. I mean, these things have shifted in a day, you know, 5, 6, 7% trades up or down within weeks, frankly. And that surprises us because the narrative really hasn't changed that much. But I think the global conflict has started to leach into every aspect. And I think investors are trying to figure out how much of that conflict will actually impact the Euro defense companies. And there's 2 sides to that. Most people, I guess, right now, based on the way the stocks are performing, are thinking that it takes the edge off the capex spending for them. But I'm on the other side of that trade. I think with every amount of demonstration of global geopolitical conflicts, that just pushes up the objective for these companies to just build their own defense systems and be armed for any kind of potential conflicts.
Yeah, and we've certainly seen that in the defence budgets as well, sort of worldwide. Peter, really appreciate the perspective for us today. Have a happy Friday and enjoy your weekend. We'll catch you next time. Peter Anderson there, Chief Investment Officer and founder at Anderson Capital Management.